The S&P held strong at the crucial 560 weekly support level, and it's clear the bulls are determined to defend this ground. Heading into the week, I'm eyeing a potential counter rally. Adding to the bullish narrative, we successfully stayed above the 50-period moving average, a critical line in the sand for buyers. The formation of a hammer candle is another notable bullish signal, though as always, confirmation and follow-through will be key here. Additionally, we remain significantly distant from the 5-week moving average, the most tagged weekly average, which could pave the way for a retracement back towards that level. Plenty of bullish dynamics to unpack in today's video, so let's dive in and get ahead of the game. If you're new here, welcome. My name is James, and you're watching High Quality Trades. So I have in front of you the SPY's weekly time frame, and you will notice the 5-period moving average. Now, price never gets very far from this moving average before coming back to retest it as either support or resistance. So being that we're very far away from our moving average at the current moment, I do believe a retracement is in order. So come this week, I will be looking for price to head back up somewhere in this area. Some other notable things to be aware of is the SPY did manage to hold this previous all-time high this week, staying above the 560 support level. So now, as long as this week we can break the previous week's high, which sits at 569.54, we should then come up and fill this gap that was created from 2 weeks ago's gap down, or I guess it was 2 weeks ago's close and then Monday's gap down. We should fill this down gap, and then it will be possible for the SPY to head up towards 582. We do have this double bottom formation to be aware of. Now, we have broken below the neckline, which is insinuating some further bearish price momentum, but we will have to wait and see if the neckline holds if we come up this week and test it, which is most likely. So if the SPY comes back up here but then can't hold and then we head back down, that may be a scenario that happens, but we'll have to wait and see. There's also the hammer candle that's bullish, signaling that buyers were able from the bottom to at least push further up than the 50% area of this candle. So that is a bullish signal as well, as long as we get follow through to head up possibly towards the 5-week moving average or maybe the 20-week. The 20-week is a quite often tagged moving average as well, one that a lot of people look at. So being that we fall into the 50, it is now most likely we head back up towards the 20 and then maybe that 5 period. Alright, so that's the weekly time frame perspective. Let's drop down into the daily time frame. We'll go over last week's price action. So we did get that gap down on Monday, and we fell below the 560 support level and then kind of consolidated under this level until Friday, where the bulls finally stepped up with the gap up from Thursday, and then Friday we pushed back above 560. So being that we're now able to get back above this level, the buyers are showing us that this level is one that may be protected and we can head up higher. So come this week, we're looking for the SPY to stay above 560, come up and fill this gap, as long as we can get above 572 and stay above, I would be looking for the SPY to then head up towards 582. There has been some bullish divergence forming here on the daily time frame. A few weeks now, we have been making lower highs consistently, while the RSI has remained mostly unchanged to maybe slightly higher highs with the price action here. So a notable thing though will be, let's drop down into the 4-hour time frame. There is a slight bearish divergence, so I will be looking for this divergence to resolve itself, either if we get a push further and we break above this candle high here at 565.97, that would nullify the bearish divergence that I'm seeing here. But if we don't, and maybe we just fall lower, either a gap down or just price falls lower, that would then be this bearish divergence playing out to the downside. And then we can wait for the next 4-hour candle or the next 2 4-hour candles to see if we get a push higher. What I would be looking for though is a possible bounce off our 200 period moving average here on the 15-minute time frame. Let's bring that up. So you will notice that price was finally able to get above the 200 period moving average that it has been stuck below since we fell from all-time highs back in February, towards the end of February. You'll see that price has not managed to stay above this moving average the whole time. And even here, when it was able to peek its head above for a little bit, we kind of only went sideways with that moving average before falling lower again. What we want is something like what's going on now, where the moving average is starting to curl upwards. And then as long as we can remain above it, like if the SPY stays above 562 and then heads up to the next resistance of 572, this moving average will start to slope upwards and then should support the buyers. If we do get a move back towards it, that would be a good area to buy calls with a tight stop loss underneath the 200 period moving average. But that I've noticed that it is a good area to buy at if you see the SPY close to it in either a bearish scenario or a bullish one. So price can't get very far from this moving average either, but if you're a day trader like me, the biggest moves happen from this moving average, either if we're very far away from it back to it, or if we're right on it to away from it. So even like the biggest moves are when we go from far away from it to the opposite direction, far away from it as well. So yeah, just a observation of mine and a strategy that I have developed. Alright, so that's going to be it for the SPY. Let's move on to the triple Qs, starting on the weekly time frame. Let's go over the bullish and bearish scenarios. Let's go over some support and resistance levels, and then just overall what the triple Qs is doing. So first thing I noticed is we have produced that hammer candle at this previous area of resistance that looks to now be acting as support here on the triple Qs. As long as the triple Qs is able to hold above this level, so say like, yeah, we are right below it, but if we manage to get above it, above 480, we should then head up towards this weekly resistance level of 496. I don't believe that the triple Qs managed to hold its 50-day or 50-week. So what we're looking for this week is the triple Qs to get back above that, and then it to go and retest the 20 period which resides up here at the 513 level. So I guess, yeah, I'm saying this is the bullish scenario for price to head up towards this area eventually, either the end of this week or maybe 2 weeks out. But that's usually what happens when we break below the 20. We go and retest the 50 and then come back to test the 20 again. And then that's the crucial point, whether we can get above it and continue moving higher, or if this 20 period now holds as resistance and then we fall down towards the 100 period. Well, we'd fall back towards the 50 and then to the 100. But that's all hypothetically speaking at the moment. We'll first need to see the bullish price action come through this week from the buyers to push price higher. Let's drop down into the daily time frame. So last week we did get a gap down. We fell below our 480 support level and then consolidated below it until the end of the week, where we did get some bullish price action and we went to retest it as resistance. So we've not yet broken above this resistance level. The triple Qs needs to get above this to head any higher. So we can So if we can get above that, we can then head up towards the 487 resistance level. If we're able to get above that, we can then head up towards 496. Those will be the closest support and resistance levels that the triple Qs needs to get above to head higher. But if for any reason the bears step in and try to push price lower, if we can't get above this 480 level, I would say then we'd go and retest the lows from last week, and then hopefully they hold for a push higher. If we were to fall below that, that would be very unexpected, but obviously we would adjust accordingly, and we would then look for this low here for price to fall down towards. That would be the next support area if 466 is broken. And I don't remember going over that on the SPY, so let's go over that real quick. So if the lows from last week on the SPY get taken out here at 549, then the next low that the SPY will head down towards is 539. Alrighty. Actually, I don't remember going over the weekly 5 period moving average. So, sorry guys, I'm a little all over the place. Lots of information to go over. Let's bring up the 5 here. And you'll notice the triple Qs is really far away from that too. The only other time we've been this extended is about that August drop that we got. But price, immediately reversed and came back up to the 5 period. So even here, when we closed kind of far away from it, we came right back up to it. So it's usually what happens. So it'll be what I'm looking for to happen this week. Okay, so we kind of went over the weekly, daily. Let's go down to the 4-hour time frame. Just get rid of this for a minute. Sort of the same bearish divergence that I kind of went over on the SPY. So we have this previous high here, and even this high here that we haven't taken out yet. But the RSI is quite higher. We are pretty close to taking out this high, so it is possible that this bearish divergence doesn't play out to the downside, and we get follow through, breaking this high here, and then maybe testing 480 as support before pushing up towards 487. That would nullify this bearish divergence. But if this bearish divergence plays out to the downside and we open up lower on Monday, I would just look for the next 4-hour candle or two to be lower, maybe go and fill this gap from the trading from Thursday to Friday, which is here at 471. That's possible. So price fall down, maybe fill that gap, and then the buyers step up to push price higher. That's a bullish scenario. Again, if we get above 480, that 487 will be the next resistance, and then we could even head up as high as $4.97. Okay, now the last thing to go over is our 200 period moving average here on the 15-minute. So the buyers did manage to get above this moving average on Friday. As long as we remain above this, I would say the buyers do have the momentum needed to push higher. So I'd first look for 480 and then a push up towards 487. As this moving average, as price stays above the moving average, it'll start to curl up, and then it'll support the buyers as we push higher. Now, if for any reason we break below this moving average, though, that would be bearish for price to then head down towards 466 and then even lower. Just like SPY, the triple Qs has a double top formation that it's now playing out to the downside as well. If we just take these highs here, and then if we were to draw a trend line just from the highs down to the neckline here, the double top formation would actually complete down here at 458. So although it looks to be we're getting a relief bounce, we have broken below the neckline of this double top, which is bearish in itself. So maybe a retest of the neckline is in order before the bears step back in and then push price lower again. Alrighty, guys, I don't want to keep you guys for too long. So thank you, and I'm going to leave you with that. Thanks for watching high quality trades, and I'll see you guys in the next video. Peace.